what's up, traders and investors? Bennett Tindle with TradingAnalysis.com. Today is Tuesday, December 22nd, 2020. Just a few days away from Christmas, just around the corner from the new year, and I thought I'd take a minute and dive into the world of cybersecurity. Specifically speaking, we're going to take a look at the charts of two different companies. We're going to take a look at the charts of Fortinet as well as CrowdStrike. Now, this particular industry group has gotten a lot of attention in the media as of recent, and for good reason. In light of the hacks, in light of the data breaches, we've seen investors, both retail and institutional, flock to many of these companies. And the question now becomes, is there still gas left in the tank? And overall, my answer is yes. I do feel that this industry group will continue to perform. I think it's an industry group that you should actively explore, investigate, perhaps even consider some exposure to it in your individual investment portfolios. But as it stands now, there are many of these names that are extremely extended, both from a technical perspective as well as a valuation standpoint. Some of them are trading 700, 800, 1,000 times forward earnings, and then you have others such as Fortinet trading 50 times forward earnings. So fair valuation for the industry group as a whole, I feel, is kind of yet to be agreed upon, and perhaps this is one of those instances in which you do see continued multiple expansion until that's established. Because what we've really seen over the past week or so is a catalyst that has ignited this move. And that's oftentimes what ends up happening. You have some sort of a catalyst that brings attention to either a company or an industry group, and you see a run up in the stock or a run down in the stock if it's a negative catalyst. And oftentimes those moves just kind of fizzle out and they turn into yesterday's news, and nobody remembers exactly what happened or why that chart went up 50% and then sold back off. Is that one of those instances that we have going on right now? I don't think so. I really don't think that this is just simply the direct result of momentum traders taking advantage of the headlines, taking advantage of the fear, and running these companies up. Okay, tech is here to stay. There's no question about it. Tech is a dominant part of our lives. It has absolutely changed the way that we conduct business. It's changed the way that we've learned. And the coronavirus has done nothing but expedite those changes. So as we move into the next decade, tech is here to stay. Semiconductors are here to stay. Communication sector is here to stay. So with that in mind, obviously cybersecurity and technological vulnerabilities are going to be of interest. So let's dive into it. Let's take a look first at the chart of Fortinet. We're taking a look at the chart of Fortinet here on the weekly time frame, and we're going back to May of 2010. In May of 2010, we begin a nice mode of impulsive sequence, which begins with a cycle degree 1-2, primary 1-2, intermediate 1-2, minor 1-2, and then you have the heart of the breakout. This is what's referred to as a third of a third of a third, which, believe it or not, is part of an even higher degree wave number 3. The intermediate wave number 3 concluded on February of 2020, at which point we have a sharp directional pullback along with the markets into the COVID low. Notice this fourth wave corrective pullback took you to a 38.2% Fibonacci retracement of the wave number 3 advance, which is a very common third wave support zone. From there, taking you off the weekly and down to the daily chart, we're going to focus in on everything that's happened out of the blue fourth wave. Out of blue wave 4, we enter 5 waves to the upside. We then have an ABC corrective pullback. The ABC pullback demonstrated equality between the corrective legs, and it also represented about a net 50% retracement of the 5-wave advance off of the March low. We're now well underway within the higher degree cycle or green minor degree wave number 3. We have upside price objectives between $188 and $200 a share. We don't think it's going to be a straight shot. Obviously, stocks don't move in a straight line, either to the upside or to the downside. It's going to be met with sideways corrective pullbacks. But ultimately, we do see continuation for shares of Fortinet, as this is a very substantial breakout into new highs, into $195 as high as $220 a share. So we have a confluence of Fibonacci price objectives offered for multiple degrees of trend between $195 and $200. Obviously, $200 is going to be a psychological price level. If we do break $200, look for $220 upside resistance, as well as upside channel resistance. So I like Fortinet. I do think we see continuation in this particular name. This is one I've added to my portfolio. The last chart we're going to look at is that of CrowdStrike. CrowdStrike out of Sunnyvale has actually been trading only publicly since June of 2019. In June of 2019, we have a 5-wave move up into the August highs. We then enter a 3-wave pullback. This three-wave move has since resolved to the upside in the form of a mode of impulsive advance. Now, given the fact that we have a fourth wave that is so disproportional to the wave 2 of the same degree, that opens up an even more bullish possibility in that the wave 2 actually completed on November 9th, and we're moving higher in a third wave position. So while I don't discount the possible continuation in CrowdStrike, I like the history that I have to work with, the price history that I have to work with in Fortinet, which increases my conviction level when establishing any trades. So for CrowdStrike, we are into parallel trend channel resistance. I'd likely anticipate some sideways chop and slot before ultimately resolving up to $300. Be keeping my eyes on this one. If we do fail channel resistance, this move very well could complete prematurely and we enter a move back down to at least mid-trend channel. So ultimately, between CrowdStrike and Fortinet, my pick would be Fortinet. I like the continuation. I like the breakout here. I do think we move up into our upside 195 to 220 price target. Now let's quickly take a look at the relative rotation graph of these two particular names. On the left-hand side, you have the weekly RRG, and on the right-hand side, you have the daily. Notice on the right-hand side, CrowdStrike has a higher relative strength and momentum reading compared to Fortinet and is starting to lose relative strength and momentum. On the left-hand side, you have CrowdStrike just moving out of weakening and into leading, while Fortinet is just made its hook back on 10-9, moved through lagging into improving. This indicates to me that we're likely going to see continuation from the improving and into the leading quadrant on the weekly for Fortinet, while here on the daily, we've started to turn higher, and I feel we will continue within the leading quadrant. On the monthly RRG, take a look at where these two names are. CrowdStrike significantly extended. Fortinet did reject that initial move into leading, but oftentimes what ends up happening is you have an initial orbital that doesn't quite make it out of the 2 standard deviation band, but ultimately does resolve higher. So even though the monthly RRG is pointing lower, the daily RRG is pointing up, and the weekly RRG is still premature and just moving from improving, likely going to move back into leading. So I like RRG combined with Elliott Wave. You can often find a confluence between the two, and it helps increase your conviction levels. So I like Fortinet, keeping my eyes on Fortinet, also keeping my eyes on the entire industry group. Thanks again for tuning in. We'll see you on the next video update. Take care.